Good morning, MMTs. We got some major news over that just came out on the wires. It's a Sunday. Today's date is 11/28 of 2010. The time is 11:10 a.m. Pacific Standard Time. Ireland will receive 67.5 billion euros from the European Union and International Monetary Fund and provide 17.5 billion euros from its own pension reserves. That's a good thing. The headline is Ireland wins $113 billion bailout. Well, this whole thing right here, folks, is what took these markets down, sold Google down, sold the indexes down. It was the same information that we knew a year ago, and it's the same information that we've been covering. Ireland became the second Euro country to seek a rescue after the debt crisis that we had over there in Greece. It's right here. So they're going to try to put it to rest. That would look good for the bulls. Some of the other things when I get down here in the article is where that part of the Ireland deal was going to be a big thing about how Spain and Portugal was going to be affected. Portugal and Spain right here. As the crisis that began in Greece engulfs Ireland and threatens to pull down Portugal and Spain, investors are looking for today's meeting to provide details on the Ireland interest rate and the fate of senior bondholders in the country banks. Well, that's a good thing as far as the contagion goes, and it will show up in tomorrow's debt, paying the bill. Ireland has been brought to its knees by the government and bankers, and they have. And several generations of Irish men and women will have to foot the bill, he said, just like here in the U.S. Their citizens have to pay for their country not managing their country, just like the U.S. had to pay with taxpayer dollars. Ireland's Sunday Business Post and the Sunday Tribune newspapers today reported that the ECB voted vetoed hurting those senior bondholders right here, because that would have really created a mess, MMTs. And it would have also, when we had the last LIBOR, L-I-B-O-R rates, when we originally had all of this contagion that started to escalate, started in January 2010, then came back to haunt the markets in April, then the LIBOR rates got out of whack and caused a flash crash. Now, that's part of it. So putting this to rest for the bulls would be good during this particular time of year. Okay? So leaders including Tritchett, he's a lot of people. So this is going to be all over the airways. And tonight, I'm going to look and see if they're going to gap the futures up. And we'll see.